If you have $100,000 sitting in a bond fund this morning, there's a decision being made 6,000 miles away that could quietly take about $5,500 of it. Nobody's going to call you, it won't lead the news. Your statement will just come in smaller one month, and you'll assume that's the market. And the man whose job it is to stop that from happening made two separate fortunes doing exactly this to other countries before he took the job. His name is Scott Bessent. He runs the United States Treasury. And 34 years ago, he was in the room when they broke the Bank of England. Let me show you how a currency you've never held reaches into your account, because the chain is only 4 links long, and every link is public. Here's what happened. On the last 2 days of July, Japan spent $87 billion buying its own money, trying to hold the price up. 87 billion in 2 days, the largest currency defense ever recorded by anybody. Put that in human size. Japan has about 123 million people, so that's roughly $700 for every man, woman, and child in the country spent in 48 hours. It bought 5 trading days. And here's the part almost nobody noticed, because nothing dramatic happened next. No crash, no emergency. The 87 billion just quietly leaked away over about 2 weeks. And today, the yen sits weaker than before anyone spent a dime. Now, why should a retired man in Ohio care what the yen does? Because of link number 2. Japan is America's banker. Japan holds about $1.14 trillion of United States government debt. It is the largest single foreign holder on Earth. And when Japan needs dollars to prop up its own money, it has one fast place to get them. It sells American bonds. Here's link 3, and this is the one that reaches your kitchen table. When a big holder starts selling bonds, the price of bonds falls. And when the price of bonds falls, the interest America has to pay to borrow goes up. That interest rate is not an abstraction. It is the number underneath your money. So let's do the arithmetic on your account instead of theirs. If that rate rises by one single percentage point, 1 point, which happens in an ordinary bad month, a typical bond fund loses about 5.5% of its value. $100,000 in bonds loses about $5,500. 250,000 in bonds loses about 13,750. And if you're a retiree with $500,000 split 60-40, the way half the financial industry tells you to be, you've got 200,000 in bonds, and 1 point cost you $11,000. That's not a crash. That's an ordinary move in the number Japan controls the demand for. It reaches the next generation too. Take a $300,000 mortgage. Your sons, your daughters. At 6.5%, the payment is $18.96 a month. At 7.5, it's $20.98. $201 more every month. $2,400 a year. $72,500 over the life of the loan. 1 percentage point. So that's the chain. Japan defends the yen, Japan sells American bonds, the rate goes up, and $11,000 walks out of a retirement account in Ohio without anybody sending a letter. That is why America stepped in. Not friendship, not diplomacy, to stop a fire sale of its own debt, which is another way of saying to stop the number underneath your savings from moving. It's the first time the United States has stepped in to hold the yen up since June of 1998. 28 years. I've been watching one specific number through all of this. A line on a government report almost nobody opens that tells you the exact moment this stops being Japan's problem and lands in your account. Right now, it reads 0. I'll tell you what it is and what it means when it moves. And I built the place I watch it from. More on that shortly. But first, you need to know who's holding the hose, because it changes what you think is going to happen. Go back to 1992. Britain had made a promise about the price of the pound, and a promise about price is only ever as good as the money behind it. George Soros's fund bet against that promise. The man who built the trade was Stanley Druckenmiller. The story usually gets that wrong. And the young analyst covering Europe, feeding Druckenmiller the ground truth from London, was Scott Bessent, 30 years old. He'd turned 30 26 days earlier. Now here's what made him different from everyone else in that story. Everybody else was staring at Britain's vault, how much foreign money the Bank of England had left to spend. Bessent was watching British homeowners. Because in Britain, then and now, most mortgages float. The rate moves and your house payment moves with it. There's no 30-year fix to hide behind. So when the Bank of England raised rates to defend the pound, it wasn't moving a number on a screen. It was reaching into every kitchen in Britain and raising the house payment. The same $200 a month we just did the math on, except all at once, to everybody. On September 16, 1992, the bank raised rates from 10% to 12% at 11 in the morning. 2 hours later, they announced 15%. Then, before it even took effect, they canceled it and quit. They quit because they finally did the arithmetic Bessent had already done. They could save the pound, or they could save the people making the mortgage payments. Not both. They chose the people. The pound broke. Soros' fund made about $1 billion. And out of that day came a rule. Hold on to it, because everything else today hangs off it. When a government has to choose between saving its money and paying its bills, it kills the money. Every single time. Not sometimes, every time. Because killing the money is the choice that doesn't show up on the news the day you make it. It shows up slowly, in the grocery store, over years, to people who can't prove what happened to them. And notice what made that choice possible in the first place. The pound could be killed because somebody had the authority to make more of it. That's the whole vulnerability. Every currency that ever broke had a man with a lever. That is the reason Bitcoin exists, and we're coming back to it, because Bitcoin is the one thing in this story where that lever was never built. Bessent didn't just learn that rule, he ran it again. In 2013, he was chief investment officer at Soros' fund, and Japan decided it wanted a weaker yen on purpose. He didn't fight it. He got on the same side and wrote it down, and the fund he ran made around another billion. Twice. Same rule, about $1 billion each time. Now that man runs the United States Treasury, which brings us to the war chest, and this is the number that changed how I think about the whole thing. Treasury has an account for exactly this emergency. On paper, it holds $217 billion. That sounds enormous. It isn't, and here's the honest version. $172 billion of it isn't money, it's a line of credit at the International Monetary Fund with a matching bill attached. Strip that out and the account is worth about $43 billion. But to actually buy yen, you need foreign cash in hand, and the part Treasury can genuinely spend on a Tuesday is $18.8 billion. Now let me put that next to your checkbook, because it's the only way to feel it. America owes just under $40 trillion. Its emergency account holds $18.8 billion. That is 4/100ths of 1%. Shrink both numbers down to a household. Take a man with a $400,000 mortgage. At that exact same ratio, the money in his emergency savings account is $189. 400,000 owed, $189 in the bank. That's the war chest the United States walked into the currency market with. And Japan burned $87 billion in 2 days and still lost. That $18.8 billion is one of the numbers I keep live on my macro command center at timtalksfinance.com/members, so I'm not chasing it across 9 websites every morning. Now the comparison that should stop you cold. In June of 1998, the last time America held the yen up, it spent $833 million, under $1 billion, and it moved the yen more than 5 full points in a single day. 28 years later, it took $87 billion, 104 times more money, and half the move was gone inside 2 weeks. 100 times the ammunition, a fraction of the effect. That's not a story about Japan. That's what happens to the value of money itself after enough of it gets printed for long enough. The gun still fires, the bullet doesn't go anywhere. And that decay is the strongest argument for Bitcoin I know, because it isn't an opinion, it's a receipt. Same country, same currency, 28 years apart, and the price of moving the needle went up 100-fold. That's the ruler shrinking. Bitcoin's ruler doesn't shrink. 21 million in 1998 would have been 21 million today, and it'll be 21 million in 2050. So most people ask, will the intervention work? The better question is, what do they reach for when it doesn't? Which brings me back to that number. The Federal Reserve runs a window where a foreign central bank can hand over its American bonds as collateral and walk away with freshly created dollars overnight, then buy the bonds back later. It's a pawn shop. That's exactly what it is. You bring in your grandfather's watch, you get cash today, you buy the watch back Friday. The watch never goes up for sale. And that's the entire point. The Federal Reserve built a machine so a foreign government can get dollars without ever selling American bonds on the open market. Ask why that machine has to exist. Because if Japan actually sold $1 trillion of American bonds into a real market, that market would tell everybody what those bonds are truly worth, and your bond fund would reprice to match that same afternoon. Nobody wants to find out. So rather than let the price be discovered, they built a side door that prints the dollars and hides the sale. That's not a currency rescue. That's price support for the American bond market wearing a Japanese costume. Here's your number. Every Thursday, the Federal Reserve publishes a report called the H41. On it is a line named Repurchase Agreements, Foreign Official. That line is the pawn shop. As of the report on August 6th, it read 0. 8 weeks running. The window is built, it's open, and nobody's walked through it. When that number stops being 0, Japan can no longer fund itself the normal way, and the $11,000 we did the math on earlier stops being a hypothetical. That's the tell. A line item, published every Thursday, that almost nobody reads. One correction on it, because the number everybody quotes is wrong. People say the window is capped at 60 billion. It isn't. 60 billion is the limit for one borrower per day. There's no published ceiling on the whole thing. We know because in March of 2023, during the bank failures, that line hit exactly 60 billion. One borrower maxed out its personal limit in a single day. And right now, Bessent is publicly pushing the Fed to raise that per borrower limit for Japan. You don't raise the credit limit on a card you're not planning to use. Now put the whole thing together. Every single tool in this story is a printing press. Japan defends the yen by creating yen. America helps by selling euros that were themselves printed. The Fed backstops all of it by conjuring dollars out of nothing against bonds that never have to face a real buyer. Yen, euros, dollars, bonds. Every one of them has a man who can make more of it. That's not a scandal. That's the design. And it's why 87 billion couldn't hold a currency up for 6 days. You cannot fix a printing problem by printing. And here's why that's about to matter more than it ever has. They are putting everything onto digital rails right now, in public, with the laws already written. Your house, your bonds, your savings. The word for it is tokenizing, which just means turning the thing into a digital token you can send like an email. Some of that is genuinely good. Settling a house sale in 10 minutes instead of 6 weeks is an improvement. I'm not against the plumbing. But run the list through the one question we've been asking all video. Who can make more of it? A tokenized bond still has an issuer, and an issuer can issue more tomorrow. Your tokenized house still has a registry, and a registry has a man, and that man answers to a county that can reassess you. A stablecoin is a company's promise that a token is worth $1, and a company has a printer, a legal department, and a freeze button. A digital dollar from a central bank has the printer and the power to decide what you're allowed to buy with it. Every single one is somebody's promise wearing new clothes. So when your money reprices onto those rails, one question survives. The same one Britain answered in 1992 and Japan is answering right now. Which asset has no issuer? There's exactly one: Bitcoin. And that is the whole reason I keep landing on Bitcoin, video after video, no matter which door we walk in through. 21 million. That's the total supply of Bitcoin that will ever exist. Not a target, not a policy, not a promise that holds until it gets politically expensive, the way Britain's promise held right up until the mortgage payments hurt. It's a rule inside the protocol, checked by every computer running Bitcoin, every 10 minutes, forever. There's no committee that can vote to make it 25 million, no chairman of Bitcoin, no emergency account, no pawn shop window, no printing press, nobody to call at 2 in the morning. Bitcoin has no treasury secretary who learned in 1992 which side gets sacrificed, because Bitcoin has no side to sacrifice. And I want to be careful about what I'm claiming, because Bitcoin gets oversold constantly. Bitcoin will not protect your account from a bad month. Bitcoin can fall 40% while you hold it, and it has, repeatedly. Anyone telling you Bitcoin is safe in the short run is lying to you. What Bitcoin removes is one specific risk, permanently. The risk that somebody makes more of the thing you're holding. That's the whole product. Every other asset asks you to trust that a person will behave. Bitcoin asks you to trust arithmetic. And that happens to be the exact risk that killed the pound, that's been grinding the yen down for 30 years, and that $11,000 in your bond fund is sitting directly in front of. Bitcoin is the only asset in this entire story that cannot be on the other side of that trade. So where does that leave the arithmetic? There's somewhere between 900 trillion and a quadrillion dollars parked in the world's store of value assets: gold, bonds, property, cash, stocks. If even 15 to 20% of that migrates into Bitcoin, the one thing that can't be diluted, the arithmetic on 21 million Bitcoin gets very large. Somewhere around $7 to $10 million for a single Bitcoin. I'm not telling you Bitcoin gets there. There are no certainties, only probabilities. And anyone who says otherwise is selling something. I'm telling you what the math says if the migration happens, and you get to set your own odds. Here's what I'd actually do. Not panic. Not sell anything. Watch that one line on the Thursday report, repurchase agreements, foreign official, and know what you're seeing when it stops reading zero. That's the pawn shop opening for real, and it's the day the $11,000 stops being arithmetic. And know the honest cost of doing nothing. If you're sitting in a bond fund because somebody told you it was the safe half, understand what you actually own. A promise, priced off a rate that a foreign government's emergency decides, backstopped by a country with a $400,000 mortgage and $189 in the bank. Free, no credit card, about 2 minutes. Take the money quiz at timtalksfinance.com/members. It shows you your net worth, what inflation is actually costing you every year in real dollars, and one move worth considering for your situation. I built it so you don't have to figure this out alone. Bessent isn't confused about any of this. He's the best qualified man alive to know these defenses fail, because he got rich twice betting they would. He isn't defending the yen because he thinks he'll win. Watch what he's actually protecting. Euros spent, goodwill in Europe burned, a bigger emergency credit line demanded. All of it aimed at keeping the American bond market from being tested. By his own rule, that names the sacrifice. Protect the bonds, and the currency is what gets given up. He isn't hiding it. He's doing it in public, on television, with a legal pad. The man who wrote the playbook on how currencies die is holding the hose, and he knows exactly how much water is in the truck. $18.8 billion of it. 87 billion bought 5 days. Bitcoin, 21 million. Fixed, forever. No servers, only a protocol. Bitcoin is the one door in the building without a man behind it, and I'm not going to tell you to walk through it. You've got the chain, you've got the arithmetic on your own account, and you've got the same rule the Treasury Secretary has traded on since he was 30 years old. What you do with it is yours. I'll see you in the next one.